Hi, my name is Amy Garish. I'm a realtor and a real estate analyst here in the Phoenix market. And I want to tell you what's really happening in this market. I know we keep hearing things like, oh, prices are falling, or no, prices are still going up. And there's a lot of confusion on what's really happening right now. I want to show you guys just the stats and everything that I'm looking at and a holistic view of what's really going on in the Phoenix market. So let me share my screen and we can get started. Okay, so this is a recap of what I posted last year. So going into Q3 of last year, I did a similar video and I'll post it in one of the links here so that you can see it. And I just want to be clear that I did this market prediction, kind of what we were seeing last year and what I was hoping or what I was thinking we were going to see. But what I didn't take into consideration last year was a full-on economic halt coming in from the Fed. So let's just kind of go over what I was seeing last year and what's really happening this year. So last year, we saw an increase in capital from institutional investors, which was creating a pricing bubble. Yes, that happened. If you've been living under a rock, you should know that that's what happened. And I was expecting this bubble to kind of last a little bit longer. So here I highlighted this. This is not projected to result in a market crash, but rather a flattening or pullback in pricing when the majority of the acquisition activities have ceased. So what I want to clear up here is that the market has definitely changed, that we are going to see that pullback in pricing. I think some markets are going to see a bigger crash, not going to lie. That's what I think is happening in some markets like Phoenix, specifically, markets like Austin, Boise, Idaho. A couple of markets are really super overheated because of these institutional investors purchasing homes at phenomenal rates. What we're seeing now is that because of the high interest rates, we're actually seeing those institutional investors kind of backing out and slowing down their buying. And so I thought this was going to slow down slowly and that we were going to see like kind of prices fade down. But I think in Phoenix, we're actually going to see prices actually come down quicker, causing a crash-like effect. So that's what I predicted last year. We can finish going over the summary. Residential clients will continue to battle investors for current inventory. That also has changed dramatically quickly. Residential clients are now seeing more inventory. So there's less fighting right now, guys. So if you're looking to buy a home, you have more inventory to choose from. I'm going to skip over that one and come down to this one. I had predicted that it would take time for traditional build-to-sale builders to ramp up, possibly seeing 2024 as when optimized building was happening, like when we had more inventory from builders. That's actually happened a lot sooner than 2024. We're actually starting to see new construction inventory sit on the market. And so we're going to start to see more new construction inventory happen this year in 2022. So I think what I predicted totally happening, but happening a lot sooner than I had originally forethought because of the Fed and what they're doing to fight inflation. So let's go on to the next slide here. My key concerns last year was that the excessive capital in the market from institutional investors was creating that bubble. The future decrease in rental demand, that's also something that I think may not slow down. So I think now that interest rates are higher, it's going to cost more for a mortgage and the rentals will be cheaper, right, comparatively. So, and I'll go over that a little bit more on one of the other slides. Affordability for both renters and home buyers, a yin and yang. So I did see this coming up as both renters and home buyers. There may be some pull there, right, where it's really expensive to own a home because prices were going up so fast, really expensive to rent a home because because these institutional investors were kind of driving up the rents. So I kind of saw that for happening, but now I think that with what's happening right now, with the interest rates going so high, it's more, again, more costly for a mortgage, which makes those rentals look super, super affordable right now. So we're not going to see this stagnate in both markets. We're going to see the rental markets kind of continue to be real good right now. So excessive supply in 2024 and beyond, again, happened a lot earlier than I had anticipated because of the interest rate hikes. So I think what out of my concerns was seeing the foreclosure rate starting to increase. Slowly it's happening. Didn't happen at the rate that some people had predicted, but the foreclosures are starting to come back to the market, just at a really slow rate. New construction supply, again, happening now, and institutional sell-offs, again, happening now. We're starting to see more supply hit the market from some of these institutional sell-offs, new constructions, and also what I don't have on here is the smaller investors are also starting to sell. So what we're starting to see as our inventory increases is people who bought into the Airbnb fad of like, oh, we can just Airbnb it, we can short-term rental it, we can do this, we can do that. They're starting to get a little scared in the market because they're not professional investors. And so these are like second homes for them. We're at a high peak of the market. They've got some equity in there. They can start selling those off and kind of, while the market's still kind of high. So that's what we're seeing right now, is kind of when liquidity falls out of the market like it does because of the high interest rates, you're going to see the more less experienced investors sell off first. So that's definitely what we're seeing happen. Let's talk about supply in the Phoenix market. So right now you can see like we just had a huge influx in supply, literally like 100% inventory. Like we've doubled our inventory in a matter of months. You can see the note here from the Armless analyst that total inventory has a month-over-month increase of 37.5%, while year-over-year reflects an increase of 44%. But month-over-month, we're seeing like our inventory double, like insane amounts. This number here at 37% is from May 2022. May 2022. We're already almost at the end of July, so that number has increased since reporting this number. So we're seeing it double. So inventory is up. Now let's kind of take a look at demand. Demand is flattening out now. It's starting to fall, big time. I have another stat, which I don't think I have in a visualization for the slide deck, but there is something that we can track, right? In Arizona, in the Phoenix MLS, we track all of our showings, through this app called Showing Time, and like we can book appointments with sellers, and it makes it super easy. So they have all of the data on showings, and showings are down 42% going into June, at the end of June here. So showings are down 42%, which means basically like buyers are not, like 42% of the buyers are now have exited the market. So we've seen that drop in demand quite quickly here in Phoenix. And I'm going to go over how significant it is in the next upcoming slides. But you can see that this is showing that demand is slowly starting to fall. I think, again, this is May 2022. We're almost at the end of June. So we're going to see more significant drop off going into July and when the June numbers come out. So as this number goes up this way for inventory and this number slides down for demand, that'll put us into that buyer's market. We're heading there. We're getting into a balanced market now, and we're going to be sliding into that deep buyer's market if things don't change. So, and the way that our market is moving very, very quickly, we're going to cross that and we're going to be in that buyer's market soon. So interest rates, let's talk about interest rates. So coming up here with interest rates, I know you guys hopefully have been watching interest rates. You haven't been living under a rock. We went from like 3% to 5%, 6% super quickly. And so what that means is on the same $300,000 mortgage, the payment has risen from $1,265 in December of 2021 to $1,800 in June of 2022. So we're talking like over a $500 hike in housing costs. So if you're looking to buy a home, just know that it's really super expensive right now. So there are some things that we can do to offset that, and I'm going to talk about them in another slide coming up. But it's painful, right? And so the buyer pools have shrinked because affordability has gone down, and only certain people can afford a home in the market right now. It's also playing a role in our investor activity because the rate increase is causing investors to bail from this market. Investors drive 20% of home purchases here in the Phoenix market. Our market has always been investor heavy. And then with the institutional buyers coming in here, it's like it causes instability in our market because they're taking the homes off the market. They're driving the home prices up because the inventory has been low. But the regular people like you and me can't afford the housing because it's so expensive. And so they were kind of driving that up and creating that liquidity bubble. And now that interest rates are high, they're pulling back and they're not spending in our market, which is causing our market to drop faster than, say, the national average. So we're seeing that pullback quickly and faster than most of the markets in the United States. So with investors backing off, it's also causing more of a demand pullback. So not only are we seeing the residential buyers, right, who are dependent on like, do you want to be house poor? No, you don't. They're pulling back because they don't want to be house poor, and renting looks like a better option to them. And investors are pulling back because, again, it's too expensive, and then they can't price it, they can't play in the rental market. So there's that happening, right? So we're seeing investors pulling back, we're seeing residential buyer pulling back. So our pricing and everything, our inventory is going up, our pricing is going to come down because we're so heavy in both of those demand levers in our market. So let's go to pricing trends. So in May 2022, like our price reductions are up. I think this is a month over month. Our year over year number is 170%. Like our price reductions are up 127%, or I'm sorry, 170% month over month from May from April, because I feel like April was our peak, guys. That's when prices peaked out. And then boom, like interest rates kind of stagnated the market, and we saw price reductions started to happen in May. And so we're going to continue to see prices come down as our economy and the feds keep the interest rates higher. And as long as mortgage rates stay on the high side, comparatively, we're going to continue to see these price reductions come down until affordability happens, guys. So right now, currently, without investors driving our market is unaffordable. So what we're seeing in the national average of the price reductions is 39%. So let's go back and compare that, right? National average price reductions, 39%. Phoenix market price reductions, 130%. Insane amount that our market is dropping a lot faster than the national average. So here's what we're seeing. Economic trends to consider. Price reductions will continue until morale improves. The morale in the market, economic status, everything is just like falling apart. Everything's on fire. All of like the headlines in the news are like doom scrolling headlines, right? Everything's falling apart. The stock market's falling. Inflation is rising. Interest rates are rising. Consumer pricing is rising, right? Gas costs are up. Everything's expensive. You can't go out to eat at a restaurant without spending $80 for a couple people. Like it's insane right now, guys. And so what's going to happen is that us as consumers, we're going to rely more on our credit cards in the short term before we actually come to the reality of we need to stop spending, right? Yeah, if you don't know me, I do swear. So before we're going to be relying on our credit cards more, right? We want to continue that cost of living or that standard of living that we have been just so accustomed to, right? We could buy things were cheap, gas was low, like everything was great, and we could continue spending, but no more, right? So things are going up. So that's going to happen. And I want you guys to be very careful. I want to talk about this in another slide, but increases in debt from your credit cards and the loans and things like that is going to have an effect on your mortgage approval. So if you're one of those people who are waiting for the market to come down so that you can go in and buy, don't be an idiot and put a bunch of stuff on your credit card, because that's going to reduce the debt to income ratio that mortgages and lenders look at for your approval. So a lot of people are saying, oh, I'm going to wait for prices to come down. But guess what? They're going to fall into this credit card trap. So don't be one of them if you are wanting to follow the market down and buy when the prices are lower. So let's talk about if you need to sell your house coming up. Okay, if you're one of those sellers that are thinking like, oh, maybe it's a good time to sell my Airbnb, right? Because 20% of the market are those people. So I would imagine 20% of the people watching this video may consider selling their home to, as the market comes down so that they can cash out somewhere near the top, right? You guys missed the peak, but you could still sell right about here and still cash out and be high enough to where you'll still make good money. So if you're one of those people, the tables have turned. So a few months ago, you could sell your house, you could get multiple offers, you could have people waiving repairs, right? They still did a home inspection, but they were like, but we're not going to ask you to fix anything, right? They were willing to overlook the stain in the carpet. They were willing to overlook if it needed a paint job. That kind of stuff is no longer going to be in your favor if you're thinking about selling your house, okay? It has to be move-in ready. There's going to be lots of options on the market for buyers now. Inventory's gone up. So if yours doesn't look good, they're going to go find one that they like. Okay. So make sure it's move-in ready. Make sure the repairs are completed before you put it on the market. All the little things are going to matter. Don't overprice your house. Gone are those days of just setting a price and letting the buyers meet that demand. That is no longer going to happen. You're going to start chasing the market down. So you may want to start your asking price a percentage below what the comps say. So don't overprice your house either at or slightly below the market to feed that interest in getting people in the door to look at your house first. The other things that you're going to want to consider doing is offering an interest rate buy down. If you've got equity in your house and you need to sell it, you may want to use a little bit to offer that interest rate buy down so that the buyer can get a good deal. So they don't feel mortgage heavy, that they can get that interest rate purchase down. Also, you may have to consider closing cost incentives on top of an interest rate buy down. You may have to consider paying $3,000, $5,000 of the buyer's closing costs. All of those loan fees and everything that buyers were fronting for a few months ago, they're no longer going to be willing to do that because their mortgage is going to be such more expensive. So if you're thinking about selling a house, consider these as strategies to get your home sold as this market continues to slide down. Now, if you're buying a home in this market, I'm going to tell you to buy when you need to, okay? Maybe a young family looking to get out of an apartment, get more space. And the good news is that you will now have more options to do that, okay? I personally don't need to move and I'm going to wait, but some people need to continue growing their families. Some people need to get out of a bad neighborhood. Some people need to move. There are going to be people relocating into the Phoenix area, and they're going to still want to buy a home because for tax purposes and all sorts of reasons that people continue to buy homes. Now, if you're going to continue to buy a home for any of those reasons, there are things that you can do now that you couldn't do a few months ago. And I talked about it in the last slide for the sellers, right? So I should have changed that from offer an interest rate buy down to ask for an interest rate buy down. You now have more negotiation power going into these home sales as inventory continues to rise and price reductions continue to rise. So you have more negotiation power. Ask them to buy your rate down. If they're not willing to, find somebody who is. Repairs, again, sellers were selling their homes as is. They weren't doing the repairs because buyers just, the demand was so high that they would take anything that a seller said yes to. So now you have the option, do not go into purchasing a home if it's in disrepair, if it's going to be more expensive to maintain that home, move on to the next home, find another home that's in better condition or the seller's willing to repair. Move-in ready, again, you have lots of options. There's going to be homes on the market that have better upgrades that, again, if you're in this market, there's no reason for buyers at this point to buy a home under the standards that they really, really want. More inventory is coming to the market and it will for the next few months. So you have lots of options. Negotiate price. That's the next one on the list. One thing I track as a real estate agent is days on market. If a house has been on the market for over 30 days, 60 days, 90 days, to me, that's the number one signal that I can negotiate with them and get that price down. So work with an agent that knows how to negotiate days on market and market conditions. Let's go into closing cost incentives. I said this in the last slide. If you're a seller, you may be asked to pay closing costs. If you're a buyer, I'm telling you in this market, ask for it. There's not a lot of options right now for sellers, right? Like I said, home buyer traffic is down 40%. You have the upper hand right now as a home buyer. Take advantage of it. Get that savings from the interest rate buy down, get that savings from closing cost incentives, negotiate that price, and make sure the seller is doing repairs. I think that was my last slide, guys. So that's what's happening in the Phoenix market. Again, people are going to continue to buy homes because, again, their families are growing. If they're moving in from another state, tax advantages of home ownership is still available. So people will still be buying. There's just going to be less of them. So that's what's kind of happening right now. Me personally, again, I don't have to buy a house right now. I'm in a great house. I have a house that my kids live in, right? I do have an investment house, and I will be one of those people who will be watching those price reductions, right? Let's go back to that slide as the summary. When this month over month number starts to trend down, that is going to tell me that we were getting closer to the bottom of the pricing pullback. Okay. So I will be watching the price reductions. When they start to slow down, that's going to signal to me, hey, start taking a look to see if it's a good time to buy. And if for an investment property, okay, not talking about, you need to move, you're buying a home for your family. I'm not talking about that. I'm talking about investment properties. This is when I will be entering the market. Now, things to consider, will interest rates go up past 6%? I don't know. So that also could be something to think about when you're waiting for the market to kind of do its pullback thing. If interest rates are a lot higher, like it's still going to be expensive to enter the market. And then there will be that loss of equity, right? That right now it's okay to start asking for that interest rate buy down because equity's still kind of high. As the prices pull back, those sellers are going to lose out on that equity, and they won't be able to afford to buy down your interest rate. So something's going to happen there. And I'm hoping, and I don't know if that's what's going to happen, but I'm hoping that interest rates will stay kind of stable and not fly up to 8, 9, 10%, right? So as long as interest rates stay good, I'm going to consider buying when the price reductions slow down. So that is where I'm going to be at. Tell me where you're thinking, like, what do you need to do? Do you need to sell soon? Are you thinking about selling because you do own a second home and you want to cash out while the market's still high? Let me know in the comments, reach out to me. Happy to help you achieve your real estate goals coming up. This market's going to be rocky. always here to help you and help you strategize your next real estate move. Have a great day, guys.